Hello and welcome to this week's crypto update. So what's been happening in the macro and how is it affecting the crypto world? Well, first of all, we have JP Morgan putting in their speak. They have said, asked the question, is Bitcoin undervalued? Breaking, JP Morgan says current Bitcoin price is too low, sees upside to 126,000 by year end. Why is that big news? We've been to 124,000. It's not what they've said, it's who's saying it. It wasn't that long ago, a couple of years ago, when Bitcoin was, on the 4,000, 10,000 mark. They were calling it a scam, pyramid scheme. They said if anyone within their business was seen holding it or trading it, they would immediately be fired. And here they are now stating when Bitcoin's at 111,000 that it's undervalued and should be at a higher price. They say Bitcoin's too cheap. Right now, Bitcoin is trading near 111,000, but according to JP Morgan, fair value is 126,000 and it could get there before the end of the year. Expectations are certainly that it'll get to there and beyond, but it's interesting to see how the tables have turned and the banks who were calling it a scam are now coming out, saying it's not at a big enough value and it's over 111,000. Then we have David Bailey, who's chairman of Bitcoin Magazine and the Bitcoin Conference, dropped his statement. We're not going to see another bear market, not for several more years. So his argument is here, there's not going to be another Bitcoin bear market for several years. Why? Because every sovereign, bank, insurer, corporate, pension, and more will own Bitcoin. The process has already begun in earnest, yet we haven't even captured 0.1% of the total addressable market. We're going so much higher, dream big. So I think we can see here the general movement and thought process, and I'm sure most people are on this page at this stage, is that the likes of Bitcoin, the likes of Ethereum, in the medium to long term is going to go much higher than where it is right now. Of course, we can see volatility, but for now, it appears it's going to go higher long term. We see here MetaMask has recently introduced a social login feature, allowing users to create wallets with Google or Apple accounts, or making access to crypto easier for retail investors. Metaplanet plans to raise another 880 million via share option offerings to fund fresh Bitcoin purchases. So again, this continuous thing of new and existing companies going out buying more and more Bitcoin. We see here BlackRock Bitcoin ETF is holdings overtake that of Coinbase and Binance. ETH may be next. ETH held in BlackRock spot Ethereum ETF is on the verge of flipping Coinbase, and as declining inflows to centralized exchanges highlight tightening supply for Bitcoin and Ethereum. In other words, there's less and less and less Bitcoin and Ethereum remaining on exchanges, and it's moving into the hands of institutional investors who have a very long-term view. So they're not buying it to sell it sometime later, they're buying it to hold long-term, which of course in turn means there's less of it over time going to be potentially available for sale. And as demand appears to be only increasing, that would suggest there's a long way up for here for both Ethereum and Bitcoin, and probably many other altcoins as well. We also see Tom Lee's Bitmine surpassing 8 billion in treasury after the latest ETH purchase. They're talking about getting to 5% of owning 5% of all ETH. They're also talking about raising another 20 billion for buying into Ethereum. There are other companies already stating that they want to have 1% of all of ETH, and this is growing rapidly. So what's happening? So we've got corporate crypto treasury updates. So despite Bitcoin's price being in a slump, it's had a little bit of a pullback. The corporate crypto treasury bid is full steam ahead. Here's your macro updates when it comes to corporations buying Bitcoin, Ethereum, and Solana. Bitcoin, 174 publicly traded companies now collectively hold 989,000 Bitcoin. That's 4.7% of all Bitcoin total supply. We should hit 1 million within the next week or two, and likely we'll get to that 5% mark soon after. So that's incredible, and that's 5% of Bitcoin that's going to be held, you expect, long term, with very little interest in selling any of it. Ethereum, 16 publicly traded companies now collectively hold 3.1 million ETH. That's 2.1 5% of Ethereum's total supply. This also means that corporations have been able to acquire ETH faster on a percentage basis compared to Bitcoin. Of course, the market cap is much lower of overall Ethereum to Bitcoin, and so it requires less money to buy up the same amount of percentage. But at the same time, it's only sort of really gathered steam in the last couple of months, and Ethereum, the amount of Ethereum being bought up is being bought at incredible rates. And it'll be easy to see corporates, etc., holding 10% of ETH before too long. And then we have Solana. 8 publicly traded companies now collectively hold 3.4 million Solana. That's 1.5% of Solana's total supply. And again, that whole bid is just starting to kick in. What happens when we start to see ETFs with the likes of Solana, possibly Hyperliquid, Chainlink, and many others that have been mentioned? It just creates that overall demand, but it also creates that cascade effect that we're used to seeing within cryptocurrency, where Bitcoin gets bid up first, then it moves to Ethereum, then it moves to the other top 10, top 20, and so on. And it appears it's happening very similarly within the institution buyers, because I don't believe that the big retail buy has happened at all yet. Most of it is coming from that institutions and corporations and so on. So I believe there's a long way up to go, but that doesn't mean there's not going to be volatility. I mean, we can see here from the Bitcoin chart, we spoke when it was here, just prior to the Jackson Hole Symposium, where Fed Chair Jerome Powell came out and was quite dovish or quite positive about there being September rate cuts, which was surprising to many, including me. However, I did say following it, I expected the trading to end up inside in this box, and that's exactly what happened. We first had a huge pump, and within 48 hours, it was back and trading within this range where it is currently still. Where we'll go from here? Well, there's been lots of volatility and weakness shown in Bitcoin in recent times. If that were to continue, if it breaks down from this box, it could go down significantly further. Of course, the weekends are usually volatile. Who knows what comes next? And it could just take one other announcement within, without the White House, and it could pump just as easily. So, usually unpredictable, but at the moment certainly showing signs of weakness. And we can see within Ethereum at the same time, it was here that speech was being given, and again it pumped. Ethereum has held a little bit better from the pump, but again, if Bitcoin pulls back significantly out of where the range it's in right now, I certainly see it coming back at least into this box and potentially even further. But again, that's just one base case. There's many options, as we know. It's usually volatile, and one announcement, like I say, from the White House could drive this up or down. That's what's happening at the moment. Back to the update. Ethereum is making a statement. Breaking: Ethereum ETFs captured 10 times more inflow than Bitcoin in 5 days. Wall Street's got a new favorite. Over the past 5 trading days, spot ETFs pull in 1.83 billion. That's more than 10 times the 171 million that flowed into Bitcoin funds over the same period. In other words, all eyes were on Bitcoin for 6 to 12 months. All the money flow from ETFs was going there, very little into Ethereum. Now we're seeing that move very much across towards Ethereum. It's the new one on the block. And of course, when more ETFs come out, maybe that moves on from there too. But in either case, both Bitcoin and Ethereum still performing extremely well, and still huge buy orders coming into it. So where to from here? Well, it's worth noting at the same time, and here's the headline is, it's a bad sign for consumers when dollar stores, in other words, really cheap outlets, outperform Nvidia. So Nvidia, from a share price of view, is absolutely killing it, and it's up 30% or just under so far this year. So it's completely surging. But there's other dollar stores such as Dollar General and Dollar Tree, which is where I suppose people with really tight budgets are shopping. Well, more and more people are starting to shop there, which shows a sign of the overall potential weakness in the consumers within the US. This could be another sign to show that we could have a weakening economy in the US, and that, of course, in the longer term could be detrimental to the overall, any risk on assets, including the stock market, the S&P, and of course Bitcoin and others. But interesting to note is, the share prices in those have gone up nearly 50% this year, whereas Nvidia's only 29%. But the point is, it's an indicator and something that we need to keep an eye on. But what it does lead us towards is it gets more and more likely that we will see the rate cut in September. And of course, that should be positive for risk on assets in the short term, but maybe if the bond market see this as something that's overall detrimental, it could have the opposite effect. So let's see. Hope you found that useful. We'll talk to you all very soon.